close more loans, right? So how do we do that? In order to close more loans, we teach that you must become a master at 3 major capabilities. What are those capabilities? First capability is prospecting. So what is this? This is cold calls, sphere of influence, otherwise known as warm calls, and bridge building, right? Otherwise known as networking. How do we take our relationships deeper? How do we get introductions to new people through our existing relationships? The second capability, major capability that we need to master in order to close more loans is knowledge. Specifically, what I mean is knowing guidelines, taking the time to read guidelines, and knowing how to structure deals. Knowledge will separate any loan officer from the pack very quickly and probably more effectively than any other method. The third major capability that we teach that is required in order to close more loans is marketing. And some people ask, what's the difference between prospecting and marketing? I'm sure you know it's very simple. Prospecting is an active approach. Marketing is a passive approach, more of an awareness campaign. And prospecting is actually going out and uncovering stones and actually asking for the business. So within these 3 major capabilities that we have to master in order to close more loans, we pull on 3 different levers, right? The first different lever that we pull to drive the 3 major capabilities is what I call the intentional calendar. The intentional calendar. What does this mean? Intentional calendar means that we divide our time into 3 buckets of time. The first bucket is where most people, especially loan officers, spend the entirety of their days, lives, and careers in the reactive bucket, right? Stimulus comes in, response takes place, email comes in, they respond, phone rings, they respond, notification comes in, they respond, nothing ever gets finished, all day reacting, never building. So we teach to build into the calendar actual scheduled time, because we know that if you want to change your life, nothing changes your life more effectively and more quickly than changing your calendar. We teach to build in proactive time. This is time where we literally schedule time on the calendar for doing the major capabilities. Prospecting, dedicated, focused, scheduled, distraction-free time to prospect. Same with knowledge, time where all distractions are shut down, everything's turned off, and loan officers are literally reading guidelines. Novel concept, but reading guidelines separates people faster than what I've ever seen before. And marketing. We teach a lot of specifics in marketing. And just to give you a sneak peek of what's to come, we teach that marketing should be built around 3 things: a mission, a tech or tool, and either a product or family of products. I'll get more into that later. The third bucket of time in the intentional calendar is reflective time. This is something that, like I said, most loan officers spend 100% of their days in reactive time. Successful loan officers build in scheduled, distraction-free, proactive time where they're working on the 3 capabilities. Almost nobody builds in reflective time, and this is what makes a tremendous difference. Reflective time means time to sit back when you're taking a 30,000-foot view, when you're not engaged at work. It's in the evening, it's on the weekend, and using some carefully scripted questions to draw out insights that give us an analysis of our business, where we can analyze, adapt, overcome, where we can reiterate and learn from ourselves and from our own experience by taking the time to be reflective and insightful and using specific, well-crafted, well-designed questions to draw out these insights. So that's the first lever that drives the capabilities that we teach in our program, the intentional calendar. The second lever that we pull is what I call the unique value lever. This is obviously very simple. What does unique value mean? It means not being a me too. It means creating something that is unique, that is repeatable, that is something that when you're making your sales calls, when you're doing your prospecting, you feel very comfortable with. You feel that is a unique value that other people are not offering, and a way to differentiate yourself in the business. So the quickest way to create a unique value is by leveraging a niche, but more than just leveraging a niche, which is what everybody runs to these days. We pull 3 different capabilities within this lever. The first one is making the unique value mission-based, meaning what problem are you solving in your community? What solution are you delivering in your community? Because when you have a business that's on a mission, you have advocates, right? When you have a regular business, you have customers. So the goal is to get a mission tied to your community to develop advocates and really stand apart. Second part of adding unique value is it should be tool or technology based. There should be one particular tool or piece of technology that your referral partners and advocates can actually benefit from, and tie them, make yourself a little more sticky when out there doing business. And the third area of the unique value lever is that it should be product based or family of product based or even consumer based. But what particular product are you using with what tool to accomplish your mission? We could talk in a lot of detail about that, and we do in the program, but I'll stop there for the purposes of getting through this quick video for you. The third lever, Baron, that we pull is what I call the vital core. The vital core. This is old school, classic personal development that is missing from a lot of people in the mortgage business, especially loan officers. And so what am I talking about when I say the vital core? Talking about taking the time to identify our individual values, our unique human strengths, and our highest priorities for our business. Value, strengths, and priorities. You can read more about this in my book, Closer Than You Think, if you want to learn a little bit more about that. But we actually take the time to map out what are the values of my business and me as an individual. By the way, this helps when we're defining our mission for our unique value, right? What are my highest human strengths that are unique to me as an individual? We're going to leverage them, right? We're going to leverage them with the tools that we use. We're going to leverage them in our calendar and in all the activities that we're doing. And what are my highest priorities for my business, right? Where do I want to go? And that's another way of saying we create a foundation to develop a radical vision for the future of our businesses. Where do you want to take your business? What is your vision for the future? Not knowing where you want to go and spending all of your time in this reactive bucket leads to status quo. Understanding your value, strengths, and priorities, having a radical vision for where you want to take your business, how you want to scale it, what you want in the future, and building in proactive and reflective time around this unique value pulls you closer to that faster than anything else. And finally, we talk about rapid prototyping. What does this mean? Rapid prototyping means not waiting for inspiration to hit, right? But taking action and understanding that it's the activities and the commitment to the action while emotionally disconnecting from the results that actually drive motivation, right? We're not automatically struck with motivation by sitting still. We need to get into action. Activities start to motivate us, and we rapid prototype. We learn, grow, reiterate. So in a nutshell, this is the foundation, the framework of the foundational program, 12 Weeks to Sustainable Production. This particular program is really built for loan officers who are closing less than 5 loans a month every single month on average, month over month, to get them to the point where they're closing at least 5 loans a month every single month, month over month, and then we tweak from there. But this is really for those loan officers that are either brand new to the business or just on that roller coaster and not yet averaging 60 units or 5 loans per month every month. So just to summarize, 30-second overview, we want to close more loans. We teach loan officers that in order to do so, you have to become a master at 3 major capabilities. Those capabilities are prospecting, knowledge, and marketing. We pull the levers of building in the intentional calendar, meaning we recognize and honor the fact that we spend much of our day in this reactive bucket, but we're mindful that we cannot stay there. So we build in and schedule out proactive time on our calendar to do the prospecting, to gain the knowledge, and to do the marketing. And we build in reflective time, which is a real game changer that most people don't do. And this honors the fact that we can learn quite a bit from ourselves if we use some carefully crafted questions and journaling to draw out new insights. The second lever we pull is the unique value lever. And the unique value that you're creating for your referral partners should be tied to a mission, to a tool or piece of technology, and to a product or family of products. And we also teach personal growth fundamentals as mapping out your core values, your highest human strengths that are unique to you as a loan officer, and your highest priorities for your life and for your business. We use that to create a new vision or radical vision for the future. Where do we want to take our businesses? And then we rapid prototype. We learn, grow, we iterate. We constantly take actions. We focus on committing to the activities and disconnecting emotionally from the results. So I know that was a lot in a short period of time. Ooh, take a deep breath now and breathe. Baron, this is typically covered over a 12-week period, and we deliver the content over the first 6 to 8 weeks, and then we focus a lot on accountability over the next 6 weeks. And we use call trackers, we use technology, we use a number of different ways to, we use healthy peer pressure, but we build in a lot of accountability into the program. And all of this stuff that we teach is actually very tactical. There's an online portal where assignments live. So every single week there's 1 or 2 assignments. All of our calls are recorded and put into the online portal, which all of our loan officers have access to. And everything is done to get the loan officer to immediately take action and to build off of those things, not only to build results off of those things that they're doing, but also to build in accountability into the program. So I can tell you that I've run this multiple times now. On average, we see KPIs or leading indicators of success in terms of, say, credit pulls. Credit pulls go up 30 to 35% in the 12-week period that we're doing this. And for the 90-day or 12-week period following the program, applications go up over 30%. I've had funded volume on average go up 33% over the multiple times that I've run this in the 90 days following the program. So can give you more of those results and give you more testimonials and more information on how this all works in our next conversation. And I just want to say one thing before we leave, that again, this is for loan officers who are either new or have been in the business a long time but have never gotten above 5 loans per month or 60 units per year on average, month over month. But we can tweak this, and I actually do have a tweaked framework that looks very similar to this for branch managers. Right. And just a quick preview of that. It's a little bit different. The capabilities are closing loans, recruiting, and developing. Right. And retention is a big part of that. There's also a framework that uses the same model for top producers who are building and scaling teams where they're hiring people and they're actually building a super team and getting up to 80, 100, $100+ million a year. So